What's going on, everybody? It's your boy C-Zar, and we are talking about the cryptocurrency markets as a whole in this video. The purpose of this video is to address the timeline of this bull market, when I expect Bitcoin to top off and when I expect altcoins to top off. They will likely not top off during the same month. Close enough to each other, but probably likely a month apart. If that sounds good to you, hit the like button, subscribe if you want to see more content like this. Again, the purpose of this video is to just kind of outline my expectations for the end of the cycle. So let's get into it and not waste any time at all. Here we are looking at Bitcoin on the monthly time frame, BTC USD. It's the all-time history index. And just, first and foremost, I think a good thing, a kind of good metric to do would be to measure from cycle high to cycle high and just see how many months in between those cycle highs we've got, right? So very first cycle high, obviously we don't have anything before, so we can't really go from there. But this first cycle to the next cycle, that was 29 months, right? We're on the monthly time frame. Each of these bars is 1 month. The next cycle was about 49 months between highs. I don't know what that was. This next one was 47 months between highs, and it depends on how you want to look at it, right? Because this was the high, so very technically it was 47 months between the highs. But this was probably the end of the cycle, and that's closer to 40 months. I did say between the highs, though. I didn't say end of cycle, to be completely fair. And for every other cycle except for the last cycle, it's been the same thing. But last cycle, the end of cycle was different than the all-time high. But from all-time high there to where we are now, we're at 37 months. So from the current high, if you're in the camp that December was the high, the all-time high for Bitcoin, and the cycle's over, that put us at 37 months, and that definitely is within the range of 29 to 49, 47 months. But to me, it seems a bit on the short end, right? These cycles in the beginning were a lot shorter, and ever since we got that 2016, 2017 cycle here, things have been a lot more on par with something on this 49, 47 month kind of basis. And I don't expect that we're going to stop here at 37 months personally. So let's project out and assume 47 months as a good minimum. That put us in October of this year. 49 months would put us in December of this year. So there's two things right there, just simple metrics lining up in that kind of sense. If we did consider last cycle, if we were measuring, from the cycle end to the cycle end instead of all-time high to all-time high, then this would be a 40-month period, in which case perhaps what we see, if I can get to it, would be a cycle that ends in March. That date does keep coming up. There's a lot of instances that will occur in the time frames surrounding March, April, and then September, October, November, December of this year. I personally do expect that it'll be later in the year, but I'll let you guys determine that, right? We'll just look at the data and you can determine that for yourself. We won't be biased. We'll just look at it as it comes. Okay, so from high to high, I think it's conclusive evidence really that likely the cycle goes on to sometime in the later parts of this year, right? If we're going from high to high to high to high, 47 to 49 months will put us at October to December of this year. Okay, so there's that. If we're now measuring from the lows to the highs, the cycle lows to the highs, it's a bit of a different look. And I think these first two cycles again aren't really going to help us out too much because they are so much shorter. If we take a cycle low here to the cycle high, that was 24 months. From this cycle low to where we are now, it's 25 months. I mean, I guess that is kind of comparable compared to where we are now, but I don't know. Personally, I don't think that we're gonna do something like that. I don't think that we stop there. But 25 months there from this low, and it's not the bear cycle low so much that I'm measuring, right? This is the low that started the bull market. This was the low right before the bull market, right? So that low there to this high, that was 28 months. So 24, 28, low here, bear cycle low to the high. Do we want to do bull cycle high or end of bull cycle? End of bull cycle would be 28 months. That's the same as this here. 24, 28. If we included this, it'd be 35. So depending on how you want to look at it, but this time it's on the shorter kind of time frame, I would suppose. From the low here to where we are now, we're at about our 26th month, which does fall in range pretty closely with these 28, 28, and 24, the past three cycles that we've seen. So there is that going for it. But if we take into consideration last cycle, maybe the high, that put us at 35 months, and that kind of time frame would put us in October. Again, that date coming up as well. But if we were to follow suit with last cycle and the cycle before and see a 28-month bull cycle from the bear cycle low to the bull cycle high, 28 months would put us in March. But again, if you go by the actual high, it'd be 35 months. And if we went by the actual bear cycle low, this is the bear cycle low. This would not be the bear cycle low. That's kind of like your crab cycle low. And that both ways that you cut it would be 35 months. So if it was 35 months, you know, depending on how you ask the question, right? Are you measuring from the bear cycle low, or are you measuring from the nearest, the most adequate low, discernible low before you started your bull cycle? And then are you going to the cycle end, or are you going to the all-time high? Depending on how you ask that question, you could get a time frame like this, and that does agree with October. But based off how we asked it at first, that would put us, you know, in the earlier parts of the year, probably sometime in likely March or later, right? March or later is kind of what the expectation would be. But again, there's another way you could paint this that does suggest later dates, and that October month will come up a lot. We're going to measure from the halvings now. November 2012 was the first halving, November 28th, 2012. From that halving to the end of the cycle, that was 12 months. The next halving was July 9th, 2016. End of cycle was 17 months, okay? And then the next halving was May 11th, 2020. End of cycle would have been 11 months, but again, depending on how you ask this question, end of cycle or all-time high would have been 18 months. So you've got things that make sense on the longer aspects and things that make sense on the shorter aspects, okay? So it's rather inconclusive, but I don't know. You know, you can determine what you'd like for this, and I suppose a good way to divulge this information so far, if you don't like the idea that the Bitcoin cycle could run until October, maybe run with the idea that the cycle could end in March or April, and then if we were to top off sometime in October, because there are things, you know, no matter how you skin it or how you cut it, whatever word you want to use, no matter how you look at it, there is suggestions both in the early parts of this year and the late parts of this year. If we were to see something like last cycle, then you know that early part of the year, March, April, might be that first peak. That second peak could come in October, November, something like that, August, September. But I don't think we'll get two peaks this cycle per se. I think that it will run higher. But 11 months from the halving, you know, our current halving was April right here. 11 months would put us in March, keeps coming up again. And then if we were to do 17 months, like the cycle before, that put us in September. If it was to the cycle high, not the cycle's end, but the cycle high, 18 months would put us in October. That number keeps coming up as well. So depending on how you ask the question, you can make a case out for the longer term stuff as well. If we measure out now, let's see. How else do we want to do this? Let me think. All right. A little bit similar to the last one, but a little bit different at the same time. The last time, what we just did was we measured from the halvings to the all-time highs, right? Now we're going to measure from the point that you broke above your pre-halving high. Does that make sense? So if your halving was here in November, it was this month here. You had a high here right before that month. That was your pre-halving high. Your halving in this cycle was July. It was this month here, but you had a high the month before in June. That was your pre-halving high. When you broke your pre-halving high, how long after did you have of a cycle, right? So from this month to the end of the cycle, that was 10 months. You broke your pre-halving high on this month. You ended your cycle later, 12 months later. Okay, you broke your pre-halving high here on this month, oh so barely, but you did break it on that month, so we'll go for it. Your cycle's end was 6 months later. So 6 months, 10 months, 12 months, not as conclusive. If we put it to the all-time high, 13 months, kind of similar actually to that, right? And again, that makes sense to me more so because I do think this end of cycle was robbed from us last time. I thought we were due more growth. Like imagine last cycle ended here. Yes, that's what it looks like on the charts, but if it continued moving on this last part instead of being a dud, then the end of cycle would have been over here. It would have been this date here. I don't know. 13 months though, if it were to be 13 months after breaking above our pre-halving high, that'd be here. 10 months to 13 months, I mean 10 months there would put us in September of this year, 13 months would put us in December of this year, so all that lines up with the latter part. But if we take that 6 month iteration into account, 6 months would put us in May. So this is one of the kind of things that would point to a later cycle, right? Everything here, the earliest kind of phase that we could picture would be May, even at the absolute earliest. But if you are putting in the question of cycle high, it would definitely point to the end of the year, right? So kind of interesting there, a little bit of a different dynamic. I think especially with these cycles, with crypto getting more institutionalized and more let's call it civilized, it's domesticated, becoming more domesticated. I do expect that we will see these cycles being drawn out, and we might just see random pops at the end, right? It might not be this whole cycle that's going, but more so something that's kind of like drawn out, and then at the very end, boom, that's whenever you have your finale, right? Something like that. I don't know, kind of like last cycle, it was very drawn out, and then at the end, you got your little finale there. We'll see. All that to say, measuring around the halving and what you do specifically with price action before and after the halving in accordance to itself, that I feel like that's helpful. That's why measuring these dates. That's why I think the Bitcoin halving will always have significance. I don't know if any of that just made sense what I'm saying, but essentially I expect these kind of metrics, these metrics based around the halving, I expect them to hold a lot of significance because I think the halving holds a lot of significance. So breaking above your pre-halving high and how long you had the cycle, right? Because if you think about it this way too, what we're measuring here on this last metric is essentially that last part of the bull cycle. And I'm gonna show you in a different respect what I'm saying, and then we'll go over this again. Okay, so from a low point here to the pre-halving high, that was your pre-halving move. This here, from your low here to your end of cycle, this was your post-halving move, right? Same thing over here, pre-halving move, post-halving move, pre-halving move, post-halving move, right? Pre-halving move here. What's our post-halving move going to look like? I'm sure it doesn't stop here, but all I'm trying to say is, if you take each of these pre-halving moves out over here to the left, pre-halving move, pre-halving move, pre-halving move, and I just drew them roughly, but pre-halving move, that was actually a pretty big pre-halving move we just had, right? Post-halving move, and last cycle's post-halving move was weak and still weak, yet, wow, it's kind of crazy. It's barely bigger than what our pre-halving move was this cycle, and bigger than that one there too. But still, in comparison to the cycle that it was this one, it still is significantly bigger. All I'm trying to say by this is the pre-halving moves tend to be weaker. They not tend to, but they always are weaker than the post-halving moves, okay? And what that means, if we think of it in terms of the halving, again, our post-halving moves are determined strictly by whenever you break out of that pre-halving high. You break out of that pre-halving high, this is your post-halving move. This is what that is, okay? And knowing that you have this commonality in strength, right? This is when you show your full strength is this post-halving move here, right? Of the cycle, it's in this post-halving move. That tells me that likely this commonality in the time frames, the seasonality that comes along with it might be applicable to this right here in determining when the end of the cycle might be. So I really do like this one the most out of all the metrics we've probably used so far, but I don't know. One could make the argument that's only because it agrees most with that later cycle time frame kind of thing. Let's measure out now. Let's see, what else could we do? Let's look at our RSI. We'll wrap this video up here in a second, guys, okay? Looking at our RSI on a monthly time frame, well, we can't really get the 2010, 2011 cycle there, so we won't. But this cycle here, from once you got into the overbought zone for the very, very first time, which would have been not here, but it would have been this month, it wasn't until 14 months later that you found your all-time high, right? 14 months. So from being overbought to the time that you found your all-time high, that was 14 months later, okay? The very first time you got overbought here, and I'm just going to go from not being overbought, but like living in the overbought zone, but like quite literally any kind of reading you got was right here, right there, and then you topped off later 18 months, okay? If we were to take it when you were being more consistent, that would be about 13 months, pretty comparable to what we saw here. Maybe we should do it that way. I want to keep this in mind, 18 months though too. I want to keep that in mind. Okay, I'll just have them both there. I just want to see this. Okay, overbought here. You didn't get overbought here. You got really close to it, but you didn't get overbought there. Overbought would have been this month here, and then your cycle high was 12 months, right? Because that's what we're measuring to is the cycle high. So 12 months, 13 months, 14 months, 18 months seeming to be the outlier here, right? So maybe I shouldn't measure it from like the first reading you got. Maybe it should be more of this like consistent kind of reading, and in which case perhaps this reading should not be taken into consideration, right? Because does it make sense what I'm saying here? Why I'm not measuring this full 18-month time frame, and I am measuring just the 13-month, just the period where it was more consistently in the overbought zone, not from the instance that it was first in the overbought zone for this whole bull cycle. Does that make sense? Right? I'm not including this because I don't think that's conclusive enough, right? what we're measuring here is in essence similar to what we've just been measuring the last 3 times, which is this end of cycle finale, but based off the RSI instead. How long are we in the overbought zone in this end of cycle finale? This time was 14 months. That time was 13 months. This time was, we weren't in the overbought zone for 12 months. Maybe I shouldn't say in the overbought zone this whole time, but how long until we find our cycle's all-time high after we really start living in the overbought zone? And being that this was our first period, I don't think that we should measure from here and then consider this. I mean, that would have put our all-time high 11 months in, which would have been the shortest iteration we have so far, which to me doesn't make sense. Other than the fact, I guess, if you wanted to make sense out of it this way, 14 months, 13 months, 12 months, 11 months, to be completely fair, I guess that makes sense to a certain degree. What's this here? 10 months, but we wouldn't know from before that, so there's just not enough time. So assuming, though, that this count should be initiated somewhere around here, if we were to go off of a 12 to 14 month time frame from wherever that is, okay, a 12-month time frame would put us in October, and a 13-month time frame would put us in November. 14-month puts us in December. So more kind of stuff. Again, revolvent. Whenever we compare this specific cycle, whenever we compare this specific part of the cycle to all of the finale phases of every other cycle we've had, it all points to end of 2025. When we look at the cycle as a whole, it's a little bit different. And to be fair, each cycle is a little bit different from a start, right? This cycle, parabolic all the way through. No other cycle was parabolic all the way through. This cycle, just a straight line right up. This cycle, we had 2 peaks, right? 1, 2, but this was like a intermission, and then the next one. This cycle had 2 peaks, but this was a double top, right? We've never had cycles that are quite literally the same, but the seasonality, the timing based around the halving, and the election years tends to be a pretty gearing thing, a very important thing, I think, that gets things going. So anyways, I don't know, guys. I think I've said enough. Let's do a couple more things, and then we'll finish this thing up, okay? Looking at a different chart here, still the U.S. or sorry, the all-time history index, Bitcoin all-time history index here, right? But now we've got the MACD and we've got the stochastics. I want to look at the MACD. Okay, and the MACD is kind of funky. I put it in log just so that because whenever it's not in log, it looks like this. I got to zoom it in a lot, and I don't really care. We don't need the exact readings, right? I wanted to see if it was green or if it was red, so I took it out of this, put it in log, so we can see if it's green or red. And now you can't really see, but there are measurements throughout here. And what I did was I measured from right before the histogram turned green to the very last month, to the all-time high of that cycle. Okay, so you flipped green. So this month here was your last month red, and you flipped green that following month. So I measured it from here, and then from that point, 16 months later, you had your all-time high of the cycle. Does that make sense? 16 months later. We do the same thing over here. You flipped green right here. So from this month to the all-time high, that was 25 months, okay? 25 months. From this one here, oops, that's not what I meant to do. This one, you flipped green right here, is right before. This was the only time that you broke out, right? Like you went from being green to being red to being green again, but this was the COVID crash cycle, so a little bit of trouble there, showing more weakness in the midst of the cycle than we ever did before on any other cycle since before or since then as well. But from being green to the time that you had your cycle high, that was 30 bars this time. If you wanted to go to the cycle, the end of the cycle, that could be construed as 23 bars, which is pretty close to 25, I suppose. But if you stick to the cycle peak, which is what we're measuring for the other two as well, 16, 25, 30, it's like it's increasing by 5 or 4 every single time, kind of. With that kind of theory going into this, from here, from the start, if the cycle high was last month in December, that put us at an 18 count, and that just seems pretty short, right? Even if this last cycle wasn't 30, even if you want to count it as 23, 18 seems a bit short. So if it were to be 23, that'd put us in May. If it were to be 25, that'd put us in July. And if it were to be 30, like it were last cycle, and the way that I think we should measure it last cycle would be December. But we could do something that's a little bit in between all of them, right? We don't have to. This one would actually suggest maybe even something that would go into 2026, technically, because these keep getting longer each time. But I don't think we'll go into 2026. Maybe we see something in between 30 and 25 is what my expectations would be. Something probably, again, in October is kind of my thoughts, 28 months maybe. But that would definitely suggest that. We can look at the stochastics, though I don't know if we'll gain too much off of this, perhaps. Maybe we can look at it. Okay, let's do it like this. Let's do it like this. Let's not measure the bull markets, but the bear markets. Does that make sense? Yes? Because when did you start, right? When did you start this bear market? It would have been here. It would have been here when your blue line crossed below the 50. When did you start this bear market? It would have been here. Your blue line was right above the 50. Once it crossed below the 50, you were there. So pretty close. Would have been here. You got right to the 50, but you weren't crossed below it, but you were right there that time. And the bear market started there. This time you were actually in that overbought area. You didn't get down to the 50 until that very following month. So within the first 2 months, you get down there. Okay, so first off, it's possible that we could be starting a bear market now, but I doubt it. I very strongly do doubt it. All I'm trying to do by this part here is, like, if we measured from the start of the bear market here. No, maybe we shouldn't look at the bulls. Would it be 11? What about from start of the bear market to the start of the next bear market? That'd be 29 months. Start of the bear market here to the start of the next bear market. That would be 49 months. Yeah, this isn't going to help us out at all. I just don't know what I would want to do with the stochastics that would make sense out of it. 39 months, 29, 39, 49. Hey, start of the last bear cycle. Yeah, I don't know what we would get with that. Maybe what I should do is just measure the amount of time that we're in the overbought zone until we get to the top. Let's just do that. Let's see. Got overbought here, topped out here. That'd be 12 months. Got overbought technically, I would say, like, really here. Then you got to your all-time high there. That's about 20 months. You got overbought technically, like right there, technically. And then all-time high, 15 months, 12 months, 20 months, 15 months. That's a pretty consistent range, I feel like. I mean, it's not that close, but somewhat close. And then here, I mean, hey, that would imply this kind of metric here would imply that the all-time high could be in, or likely could be put in here within the next, like, 4 months or so, something like that. I don't know. But however you want to look at it, right, no matter what, if you're in the camp of thinking that the cycle is going to end in March, April, May, or you're in the same line of thinking that I'm in, where I think the cycle is going to end in September, October, November, maybe even December. Regardless, it's January. It's January 11th. We got a lot of time left in the cycle, you guys. We got a lot of time. We've got an absolute lot of time. If you think it's going to be March, right, that would mean it's January. We have 20 days, 21 hours left, so about 21 days left in this month. That's essentially a whole month, 21 days, 1 month. January, February, March. Okay, if our cycle is going to end in March, we've got probably 2 months, 2.5 months of upside. Here's what the last 2 months looked like in this cycle. Ready, from a percentage point of view, from a low to a high, the last 2 months were 260%. Last cycle, the last 2 months were 44%. The last 3 months overall was 100%. The last 2 months of the cycle before that were an 11x. So I don't think it'll be 11x. I don't think it'll be 100% that we see in the next 3 months. But I mean, maybe actually in the next 3 months, if we were to see 100%, that would be in the next 3. I think we could see 100% in the next 3 months, actually. But either way, right? Even if it is the end of the cycle, even if the end of the cycle were to be in March, April, May, we would still have more growth to go. Is all I'm trying to say by that, right? And even at the minimum, likely we'd be near 200K, if not higher than that. But I suspect it'll be higher than that. The point of this video is not to do price projections. It's just time projections. Price is a whole nother thing. So if you guys like the video, hit the like button, subscribe if you want to see more content like this. Thank you all for being here. I'll see you on the next one. Take care. Bye.